Good afternoon, everyone. Thank you so much for joining us today. My name is Sokha Yous. I'm a financial wellness counselor here with Mayo Employees Federal Credit Union. And today's topic, we're going to talk about budgeting. So we'll go over some budgeting stuff and what to do, what to include on there. But then at the end, I'll go ahead and do a little demonstration with the budget spreadsheet that we have available here at the credit union. So we'll go over some of that. And at any time, if you have any questions while watching this, you can go ahead and submit your questions online, and they'll let me know what your question is, and we can go ahead and address that. If you're a little too shy, or if you're watching the recording of this and you can't ask any questions right now, you can always send me an email. This is my contact information and my phone number. If you can't get me here, you can always reach out to the call center, and they can go ahead and transfer you over to my voicemail or take some messages. So again, this is my contact information. If you can't write this down now, you can always go to our website at mayocreditunion.org, and I should be in the financial wellness or financial education tab, and my contact information will be on there as well. Just to talk about what is budgeting. So on today's agenda, we'll talk about what is a budget, the importance of having a budget, how to budget things, financial goals, debt management, and additional tools and supports that we have here available at the Mayo Credit Union, and also some tools and supports that you have available at Mayo if you are Mayo employees. So typically when I talk about budget with people, they think it's, a restriction, to see how, instead of looking at it as a freedom and where your money is going, knowing exactly where your money is going, knowing exactly how much you have left over towards savings or going towards debt or going towards other financial goals. A lot of people think of having a budget as really restrictive, but I kind of want you to look at it a different way. It's more like a freedom. You know exactly where every penny is going to, because typically when I meet with people to work on their budget, one of the first things they tell me is, I don't know where my money is going to. So then we talk a little bit more about budgeting. So to simply put, a budget is a spending plan based on your income. So know exactly how much you're bringing in, your expenses, that includes your fixed expenses and your variable expenses. Fixed expenses, things are like mortgage or car payment or car insurance. Variable expenses are things like, how much you're spending out, how much you're spending by going out each month or each week with your family and friends, or sporting events, things like that, that should be including your expenses. And also, what are some of your financial goals, right? So it can be something as basic as knowing where your money is going to. That's a good financial goal to have. Or if you want to work on your credit, increase your credit score, that's a good financial goal to have too. So whatever financial goals that you have, it's important to have, the immediate, the short-term financial goal, medium-term financial goal, and long-term financial goal, which we'll talk a little bit more about that. So again, to simply put, it's just keeping track of how much you earned, how much you spend, how much you save will give you a better control of your financial future. So it doesn't require you to be good at math at all. I'm not very good at math. I just use my calculator all the time. So you want to keep it simple. So when I work with people with their budget, I want to keep it as simple as possible. We want, so that way it's easier for you to follow through with building new habits if things are easier for you. So again, keeping it simple. I just use a simple template, but there's a lot of budgeting tools out there online that are free and some that are low cost. So for example, YouNeedABudget.com is a good, it's a good app, but it costs a little bit of money each month. I think it's like $14.99 each month. There's Rocket Mortgage that doesn't cost anything at all, so there's a lot of good apps out there. But I just use the budget template, and I'm kind of old school, so I just kind of write down what I spent and just compare it to what shows up on my bank statement. And also, just going back to financial goals, if some of your financial goals is to actually just open your bank statement without having anxiety, that's a good financial goal to have too. We just, again, using a template, which I'll go over later today. We'll review an example today, so I'll do a little bit demonstration today to how to use our template. Now, having a budget doesn't mean that you can't buy things that you want. It just says you can't have it right now, but we want you to plan ahead of time, right? We don't want you to do spontaneously just go into Macy's and spend $500-$600 if it's not within your budget. But you can always plan to go on a shopping spree and spend that much. Just make sure that you have it available in your budget, whether it takes, one paycheck to save that much, or if it takes several paychecks to save that much. That's at least you know exactly where all your money is going to, and you're prepared for this shopping spree, and it's just not spontaneous. It should not make you feel overwhelmed at all. A budget should make you feel that way. It should not make you feel negative or, go into a little panic attack or anything. For some people, it's, you know, if you find yourself as going through that situation where you can't open up your bank statement without feeling anxious about it, or you can't look at your credit card statements, or, you know, you just keep spending and spending without knowing what's available on your credit card, or what's available in your checking account or savings account, then I think it's time for you to maybe chat with me or someone else about trying to get you back on track and working on those new good habits. The importance of having a habit, so it creates freedom, financial stability by helping you track expenses. So this way you know exactly how much you're spending in each category in life. So you may have 5 or 6 categories that are very, you know, close to your heart, or that works better for you and your family versus your coworker or your family member who may have different categories in life. So my category can be, you know, going out with family and friends. I can have a budget, you know, category for that, and say, you know, I want to spend $300 every 2 weeks or every paycheck towards that. And then I can have something for sporting events, or I can have some category for personal care. You know, it can be hair, nails, whatever it may be. And then, you know, your friends or something can have different categories in life too. So whatever works out for you, make sure you tailor it to your current lifestyle. And also tailor to the lifestyle that you want in the future. So you got to think about future you. What does future you in 2-3 years want out of this budget? What do you want to achieve then? That's why having financial goals is really important too. So you'll know exactly how much is left over from different for different savings and categories and everything. So it's really important that, you know, when you are spending money each day or each month, each week, you know exactly what category that's going to, and you know exactly how much is left over. Am I going to have enough for my, you know, Italian trip here later this year? Do I need to save a little bit more from this paycheck or next paycheck, or what's coming up? You will know how much is directed for bills, whether it's weekly, monthly, or yearly bills. You know, there's a lot of annual bills out there too, things that we don't really think about. Our car tabs, you know, it could be your Microsoft renewal. You know, things like if you live out in the country, if you need to buy, you know, propane for the year, for the winter or something, so you have to budget for that too. By budgeting, it helps you save money towards your financial goals. Excuse me. So why have financial goals? It's really important that you know exactly where you see yourself, you know, in the future. It's good that you're living for the moment now. We want to be present and in the moment at this time, but we don't want to use up all the money though. So we want you to be emotionally present here and now, but we don't want you to spend all of your paycheck in one spot. We just want you to make sure that you think about, again, the future you. What do you want to achieve in 2 or 3 years? Do you want to pay off your vehicle in about 6 months? Do you want to take a, you know, an international trip here in April or something? Do you have enough money to save for that? So we want you to have long-term goals, which would be, you know, if you want to pay off your student loans in about 10 years or 5 years, do you want to buy a house or pay off your house in about 10 years or so? So it's really good to have different goals and different categories in life, and we want you to work for that. And also, once you figure out what kind of goals you have, it's kind of like working your way backwards, right? Picturing yourself in a few months, a few years, and then a decade or so later, and then work yourself backwards. How many paychecks do you have between now until that due date for your financial goal? And then save from each paycheck. Is it gonna be $100 each paycheck because you wanna hit a certain amount, I mean maybe 3 years, or do you wanna be a little bit more aggressive and save like $10,000 in 6 months? How much would that be per paycheck? So that's why it's really important to have financial goals, so we know exactly which savings category to put your money, to have your money work on. And the importance of and if your goal is to save for a down payment or a house in 2 years, a budget will give you that freedom to reach your goal. So you know exactly when you're going to be able to start looking for a house, when to reach out to a realtor, when to talk to a loan officer, because you know exactly when you'll have you know, that amount for your down payment, whether it's 3% down payment if you're a first-time home buyer, or whether it's 20% down, or however much you want to put down towards your home. Now, having a budget helps you stop spending money you don't have either. So a lot of times if you're, you know, if you're working on your budget journey, a lot of times you know exactly how much is left over. That keeps you from overspending. You know, with the holidays coming up, it really is enticing to see all these good sales, all these, you know, beautiful, sparkly things that you want to buy. And I'm not saying that you don't deserve it, because we all do deserve the stuff that we want, but we just want you to budget for it, right? It stops you from buying things that you don't actually need at the time. So it makes you really think about, you know, if you want to save for that new bag, is it worth it to save for it for 3-4 months? Or do you want to put it towards like an investing account or what have you? It creates awareness of spending by knowing how much you must spend in different life categories, you can plan ahead of time, right? So maybe this year you spent, maybe this year I spent $3,000 on personal care, anything from whatever you consider personal care. For some people, gym is considered personal care. Manicure, pedicure is considered personal care. For some people, going to therapy is considered personal care. If I spend $3,000 this year, I can guarantee that maybe I can budget $3,000 for next year too. So it's easier for you to predict how much each category in life is going to cost you. So knowing your future income and costs can help you pay off debt in a timely manner. So if you're on a debt repayment journey, by budgeting, you can put stuff away for your regular life, also put stuff away towards your financial goal, what you want to do in the future. But also you'll know exactly how much you have left over to put towards debt too. Not just paying extra on all of your credit cards or loans or whatever it is, at least you know what you have left over in case you need to do like a lump sum payment towards a settlement or towards a debt that has a high interest rate on it, like a credit card with a high interest rate. And it can also help you avoid future debt too when you start to budget. Again, you know exactly where all your money is going to. So when you see that you don't have the money to buy the new purse or the new shoes that you're looking at, then you won't put it on a credit card, so that avoids you going further into debt. So it can even save marriage and relationships too. So most couples argue about money. So a lot of divorce happens. I think that's the number 2 reason why people get divorced is because of money miscommunication. So it's really, really important that that you're honest with yourself first about your relationship with your money and your journey with your personal finance, and then also have an open space for you and your partner to talk about their relationship with finance too. Maybe you grew up with a family that were open about finances, who were open about investment and talk about that early on, but maybe your partner didn't have that growing up and they kind of had to learn the hard way, trying to figure out, different high interest credit cards. It's hard to get out of debt when you have a credit card with high interest. Maybe their relationship with money, their journey with money was not exactly a straight line like yours, but it's just a little bit of zigzag. So it's really important that when you are in a relationship with someone else, especially when it comes to finances, it's really important to be open with them, maybe transparent with one another. I always suggest to have, a budget date. Just one day a week or one day every 2 weeks, every paycheck, one day a month or something, sit down and say, you know what, this is how much I spend this week. I'm not very happy about where, my coffee budget. So I want to increase it this coming up week because I feel like I deserve a little bit more, going out money or whatever the situation is. So it's really important to talk about that, say the budget for sporting events for kids. I don't think that's enough for this past week, so I think we should increase it a little bit more for this upcoming week so that way we won't feel so squeezed and we can always shift some money from one other category to the next category or something. But it's really important that you guys are open and honest to one another because financial infidelity is very, hurtful to within a relationship or the people that are involved in it. So it's really important that when I do see couples in my office, that they're completely open and honest with one another first. And if they're not, then it's really, really difficult for me to work with them as a team. So again, have financial meeting with yourself if you're, or find a budget buddy. It's always good to have someone to be open about finances with. If you have a best friend that you trust or coworker that you trust that's currently on the same financial journey as you are, just be open about it. Hey, I'm trying to pay off some debt, but I feel like I'm spending a little too much here. So I was wondering if you can kind of keep tabs on me. And just ask me once a week or once every couple of weeks or something, how much I put away in savings, how far I am with repaying my credit cards or loans or whatever debt you currently have. So it's always good to have, hold yourself accountable and then have someone hold you accountable as well if you need to be on that kind of journey. So reducing, being on a budget, having a budget reduces a lot of financial anxiety too, and so it really prepares you for emergencies without getting into debt. So there's a statistic out there, 67% of Americans cannot come up with $400 in cash for emergency without putting on their credit card. So if you find yourself in this category, again, you're not alone, but it's not really a club that's fun to be in, right? So when you start budgeting, it's really important that you know, again, exactly where your money is going to. And the first thing you should start doing is saving for emergency savings. Whether it's $500 or $1,000, at least then you have that available so that way you won't have to put on a credit card or apply for a new credit card. So how to budget? We want to track your expenses. Of course, it takes time and effort and tracking of all your expenses, but it will help you determine whether your budget fits your lifestyle. So a lot of times when people come to me and I ask them, how much do you usually spend on groceries? Well, it's typically like $700 for a family of 4. But then when we start auditing their accounts for the last 2-3 months, we find that each month they're spending about $1,500-$600 in groceries. And then if they say they're only eating out once or twice a week, so they're only spending about $300 a month in eating out. And then once you start auditing your accounts, or I start auditing their accounts, I see that they're eating about $600-$700 a month. So that's where all their money's going to. So the best thing for you to do, the first thing you should do, track your expenses and also audit your accounts, right? Just go to your bank statement, your credit card statement, and look back and say, what did I spend on September 1st through October 1st? Did I spend like $50 on Chipotle one week and didn't even realize it? Or am I in good standing? Should I go ahead and track something else? But it's really important that you audit your accounts, know where you were at, and then start tracking your expenses from this day forward so you know how to correct it. And if you want to set your grocery expense to like $500 a month after you track your expenses and you realize you spent $1,500 in groceries, you'll need to adjust your budget goal and plan to change what you buy. Obviously, if you were spending $1,500 a month before, it's hard to just jump down to $500 as expected. So just gradually work your way down. Maybe on next paycheck, you can say, I only want to spend, just drop it by $100, $1,400 the first month. The second month, bring it down to $1,250. The third month, bring it down to $1,000 a month. So gradually work your way down and just not be so drastic about it. There's a few different ways to budget. We have the 15-30-20 budget, which means that 50% of your necessary goes towards your necessary expenses. This is 50% of your income. 30% of your income goes towards discretionary expenses, things like food, gas, eating out, fun, things like that. And 20% of your income goes towards savings or debt repayment. And that's ideal, right? So for some people that really works out for them. They just know that 50% of their total $5,000 take home, $2,500 that goes towards their necessary expenses. Your mortgage, your rent, car payment, car insurance, things like that. There's another budget system that I really like, the zero-based budget. You look at every dollar as an employee. So out of $5,000 that you get paid that month, all $5,000 of that have a job to do. So look at it as an employee and you're telling each employee what to do. You are in charge of your own company. So you are the CEO, the CFO of your own company. So whether it's the $2 that you need to move on over to a savings account for your dog's Christmas toy or something, or whether it's $300 that needs to go towards another savings category for a vacation, you tell every single dollar what to do. So at the very end, it'll show a zero budget. I'll show that here in just a little bit. So why it's important to have financial goals? Important for funding your lifestyle. So again, we should always have a short-term, medium, and long-term financial goals. Some of the examples for financial goals or financial categories: emergency savings. That should always be number one. You should have, at least $500 or $1,000, depending on your family size and your lifestyle. And the long-term financial goal would be like buying a house, a wedding, maybe in like a year or so. That'll be a medium-term goal. A baby, if you're having a baby in a few months, that's short-term goals. How much do you have to save for the baby? How much do you have to save for while you're on maternity leave? Is the state paying you any sort of extra stuff for? I think it's the family leave pay, how much they're paying you for that. Is your job are you gonna go on short-term disability? Is that, how much is that gonna cover? Is it gonna be 60% of your current income, or is it gonna be 100% of your income? So things to really budget for. Paying off student loans, it can also be like a short, medium, or long-term goals, depending on what kind of repayment program you're on. Deductibles on your car insurance, it's real important to know, especially with winter coming up here. Know exactly how much your deductibles for your comprehensive, or if there is any, or collision if there is any. So make sure you have that available in a different savings account. Health insurance, with open enrollments, you see how much you have to pay out of pocket, your max out of pocket pay. See how much that is, have it available in a savings account if you do not have an FSA or an HSA in addition to that. Or with buying a car, do you want to buy a car within a year? How much do you want to put down? Do you want to pay off the entire balance? Do you want to just get a used car for $10,000, $15,000, or do you want to use that $10,000, $15,000 towards a down payment or towards a more expensive vehicle? So it's something for you to work on. But if you have questions on any of these, by all means, we can always chit chat about it and try to determine how much you need to save for any of them. And if you have questions about your retirement, of course, Fidelity and Item Financial can help you with that. But here at Mayo Employee Federal Credit Union, we have a group here that can help you with that too if you want. So it's with Cetera. And then paying off debt, there's a lot of people that's on a debt repayment journey. So that's a really good financial goal. Do you want to pay everything off within 2 years? Do you want to pay, most of it off within just a couple months or so? And then with debt management, it's the importance of it. So monthly expenses will drop, which means more for you to invest in the future. So the more debt you pay off, the more money you have available towards your, at the end of the month, so that we can put it towards other financial goals, So the less debt you have, the less stress you have. There's a lot of emotional relief once you pay off your debt. More freedom to work less hours or quit a second job if you were working a second job or working more hours to pay off those debt. So paying down debt reminds you to address some harmful spending behaviors that got you there in the first place. How did you get to spend $10,000 on a credit card that you just got a couple months ago? What were some of the things you were spending on? How were you feeling at that time? Were you depressed and you're just looking for a little pick-me-up? Did you? I guess there's that old saying, little retail therapy. We're doing some retail therapy. Is there a healthier way, a cheaper way for you to cope with some stress besides spending money? So a lot of times when it comes to paying down debt, I hear a lot of people tell me, you know what, I should know better. I don't know how I got myself here in the first place. I'm very ashamed of myself. I don't like being in this position. And I agree with them. I mean, I don't want anyone to feel that, to be in that position either. But there should be no shame behind it. It's once it's happened, just come on in, try to get yourself back on track. Or if you need help, you can always chat with me and we can try to get you back on track too. There should be no shame about it. It's just one of those things that happens, and we can always work on getting, digging ourselves out of debt and then get you back on track, whatever on track looks like for you individually. So with debt management, there's a debt snowball payoff method. That means that you're paying off the smallest debt first. So you're just listing all your debt, right? From the smallest balance first all the way to the largest balance. You're going to pay off the smallest balance first. And then, you'll just eventually just snowball down to paying the larger balance and eventually paying everything off. So the psychology behind it is quick little wins. So you always... It allows you to see the results sooner, which can provide a sense of accomplishment and motivation to continue your debt repayment journey. The opposite of the snowball is the avalanche payoff method. So you pay off the debt with the highest interest rate first. So you're only listing the balance and the interest rate, but you pay off the ones with the highest interest rate first, so the ones with like 30%, 31%, all the way down to like 0%. Doesn't matter what the balance is, you're just going to pay the one with the highest interest rate first. So that way you pay as little as possible. You pay as little interest as possible to make the progress a lot faster too. Different ideas to reduce expenses. We can always be creative with that, but you can always change your cell phone plans or your provider. You can change your data plans too, or join a family member for discounts. Cancel gym memberships if you're not using it. Cutting streaming services and subscriptions if you're not, if you realize that you're paying way too much. This goes back to auditing. When you audit your account, you're going to realize, oh my goodness, I thought I canceled, this subscription is costing me $35 a month and I'm not getting anything out of it. Then you can go ahead and just cut out that subscription or other streaming services too. And if you currently have your checking and savings account with a bank or an institution that's charging you monthly service fees, go ahead and move it out of that, because there's no need for you to pay them for monthly service fees or anything, just to have your money sit there. You can always refinance your loans to a lower interest rate. So if your car loan, your mortgage was a lot higher when you got it because your credit wasn't as good, but you've been working on your credit for a couple years, so now it's a lot better, you can always try to refinance your car loan and your mortgage too, or any other loans, consolidate it together so that way you can get a lower interest rate. So when you get a lower interest rate on a product or on a loan, it means that your monthly payments will be lower, so that way it saves you a lot of money. So again, it's really important to tailor your goals to your lifestyle, whatever that may be for you. Different ideas to accumulate more savings. Of course, we want you to set goals. It could be financial or habitual goals. We want you to automate your savings. If you're a Mayo employee, you can always log on to HR Connect and you can have a certain percentage or a certain amount directly deposited into a separate savings account that's outside of your regular checking account that you're using. So that way you can automate those savings and you won't even have to do it yourself. So that way you can eliminate yourself from being tempted to not move it to savings. So it can automatically do that for you. And then of course, meal planning and dining out less. We all know it's getting very expensive out there to eat out and, as a family or individual too. So it's always important to meal plan and see how much you want to spend per every 2 weeks or every week on groceries. And if you're able to carpool with a neighbor, carpool with some friends from work, some coworkers, so you can avoid paying extra gas or avoid going on extra trips too. You can always sell items you no longer use or need, things, like clothing, baby gear, household. You can always go to Facebook Marketplace. You can go to Poshmark to sell stuff. There's so many other so many websites you can sell used things on, especially baby gears goes pretty fast too. Or if you're able to, if you have available time, you can always pick up a part-time job or add a gig. We're in a gig economy right now, so you can pretty much do Uber Eats, all those extra stuff. So you find yourself that you just need an extra $300-400 a month just to pay off your debt a lot faster. By all means, pick up those extra, gigs and get your debt paid off a lot sooner. So, and then once you're done paying your debt, if you feel like you don't want to do it anymore, you can just, quit doing it. So this is we're going to work on a budget demo here. So I'm going to go escape and I'm going to go to this one. So this is a budget spreadsheet that'll be available if you guys want it. You can always call the phone center. They can get access to that and send it to you, or they'll reach out to me and let me know. So this is on a zero-based budget. So right here, the tab here, zero-based budget. The next tab is 50, 30, 20. Again, Jane and Joe doesn't are not real people. These are based off of Olmsted County numbers. So when I determine how much groceries are for a family of 4, that's based on USDA in Olmsted County. So first things first, we always want to know what your income is, right? So this is your section for the income. You can always add extra lines too if you have, extra jobs, a second job or a gig job or something. So Jane brings in about $1,500 per paycheck, paycheck 1, paycheck 2, second paycheck of the month. She gets another $1,500, so Jane brings in the total $3,000. Joe, $3,100. So the total income for this household is $6,400, okay? And so this is your next category, is your fixed expenses. You'd be surprised how many people don't really know how much the total income is. So it's really important that you know that for yourself. The next category is fixed expenses. These are things like your mortgage, electricity. I know electricity in Minnesota Energy, your gas is going to fluctuate from, parts of the year, but, and your cell phone's pretty much going to be about the same. If you have like streaming services, Discover, credit card. Again, these are things that you can add for yourself. This is just an example. And I like to list it out by due dates, right, for when the bills are due. The reason why is because I want you to be able to budget on this screen and moving forward. There's other things that you can scroll over. So that way per paycheck, each column is per paycheck and you can see which bills are due per paycheck. So that way you know exactly how much is left over. So in this situation, the mortgage or rent is like $1,800. Everything here are typically what people owe. You got their student loans, your car payments, some credit cards and stuff, cell phone, things like that. And then here, variable expenses. So their grocery bills, only $800 a month. Their household items, things like paper towels and stuff. You can also always add that in groceries too, because you usually typically buy them around the same time. That's typically, so for this couple, this household, it's gonna be $150 a month. So for variable expenses, this is what it comes out, that's how much they spend. They also want to save money too. They have some, savings and sinking funds. Sinking funds is another term for like savings categories. They want to, they have a savings account. So I always advise people that when you're saving something, it's always good to write it like a regular bill so you know that that's due, right? So they want to put $1,200 a month towards their emergency savings. and they want to do Christmas. They want to save $205 for Christmas, so on and so on. Car maintenance, house maintenance, and miscellaneous things. Things always come up that you want to, like birthdays and stuff. So you can always have the category for birthday, have a miscellaneous category, whatever works for you. But as you can see here, the total, so this is a total, for their total expenses, everything here that they paid per month to live, to have a roof over their head, to have some spending money, everything is categorized here. So they have, personal care, entertainment. So nothing is really, nothing is really left out. You can always add different categories for your lifestyle, whatever works for you. But because this is a zero-based budget, it's my favorite one. Everything that adds up has to add up to $6,400, so they know where every dollar is going to. As you can see here, $115 goes towards miscellaneous, and here for Christmas, $205. Whatever works out for you, right? So at least you know where every dollar is going to. And even though it says zero here at the end of the month, they're really not living, right? Because they have stuff set aside for different categories in life. You can always adjust it from month to month because it's variable expenses. During each season's gonna be different for kids' hobby, kids' school stuff, or if you need to buy like winter clothes, you're gonna put a little bit extra towards the miscellaneous savings category. But down here, it's always good to know what's in your accounts, right? So like your MAFQ is Mayo Employee Federal Credit Union, your savings accounts, different savings account that you may have. Here with this, you can have as many savings accounts as you want. So in this situation, this couple, they want to have a Christmas savings account, and that's their goal. Or, that's how much they have available there, how much they have in their car maintenance, and emergency savings. They put in a high yield, in a money market account. That's a term for a credit union or a high yield savings account for a regular bank or other institutions. House maintenance, you can have, in different accounts, but it's important that you know exactly how much you have in each account, right? So financial goals, so you can have different financial goals here too. You can write down what yours are, and then, what the goal is, your start date, you should always have a due date, and if it's been completed or not. And they have some debt, they have some credit card debt that you can always put here. So, so to use this budget spreadsheet, you can use this or anything else, but for the sake of this, for example, if she's getting paid like $1,500 for this paycheck, here, then it's say the total income for this paycheck, there's $1,500 left down here. So now we want to budget per paycheck, right? So every paycheck that Joe is getting and Jane's getting, we want to budget and see what bills are due. So we kind of see what's between this due date and that due date, or this payday and this payday, and see what kind of bills are due. Maybe for this payday, they only have to pay, the first like 8, so let's say the next payday is on the 9th or something. So I'm just going to make something up. Where are we? So November 9th is their next payday. So between today's payday and the next payday, the only thing that they really have to pay for are things that are due up until the 8th. So, $1,800. You can always copy and paste. I'm just going to go the old school way here. So then $150 or $100 for Minnesota Energy, and then they just have to pay for car insurance. That's $200, right? So then when you see down here, out of $1,500 paycheck, what they have left over is, negative. So that means that they have to have a little bit more money extra. So we'll say Jane got paid $1,500, and then she has to take some money out of a mortgage savings account and just cover that for an extra $1,500, just to cover her mortgage and life and things like that. So you can take a look and see, budget per pay period, see how much is left over, and if it's going to be negative, then you have to figure out where that extra money is going to come from. Did you put some extra money towards your mortgage account or house maintenance account? So you can always pull out of there. You can always pull out for different savings account too. You can always plan for that if that paycheck's not going to be enough. But then you see here that there's $750 left over. You can always say, maybe we'll just skim back a little bit on groceries, but we know we're going to eat out a little bit more. You can always rearrange it to match your budget to make sure that this is zero, or try to save as much as possible too. And so when it comes to debt repayment, we can always talk about this and say how much is going towards debt and stuff. Or you can just have, for your Macy's payment, you can have an extra $100 going towards that. But that's a whole different spreadsheet there. But just to let you know that it's important that something as simple as this, just knowing your income, knowing your bills, knowing your variable expenses. Again, these are fixed bills up here, fixed expenses. And then knowing your financial goals. That's what makes up your budget. That gives you the freedom to figure out when do I want to, when do I have time, or excuse me, when do I have the finances to go to Italy? When do I have the finances to go to, Vietnam or something? So you can always put it towards your sinking funds budget and know exactly how much you have left over. So again, 50-30 in this situation, the couple makes $6,400. 50% of $6,400 is $3,200. So out of $3,200 goes towards their fixed expenses. And then 30% goes towards variable expenses, and then only 20% goes towards their savings and debt repayment. So in this situation, I must add something a little bit extra, but it's supposed to be at 0 also. But it's really, really important that you figure out whatever works for you guys. If the 20, 30, 20 works for you, then by all means do so. Zero-based budget works for you, then let's do it. But it's also really, if you want this spreadsheet, again, I'm going to send you the whole book if you want to. You can always have like a bird's eye view, and you see how much is being paid per month, and it gives you like a year-to-date total. Always go to the end there. So you can also just take a look and see how much have we paid total so far towards mortgage. We're going into November. How much did we pay from January to October? You can always keep track of that too. And account inventory, I think it's really important for everyone to kind of have a list of where all their financial stuff are at, right? Again, this doesn't belong to anyone at all. You can always I just use as an example. So banks and credit union, always, put down your institution here, what type of account they are, routing, checking account number, the beneficiaries of each account, if you want to add beneficiary, but it's really important that you do add beneficiary, because we all know we just don't know, right? So when I deal with people sometimes that came in and said, my mom passed, but I'm not the beneficiary, I'm not on her account, then we're really limited of the things that we can share with you or provide. What percentage is the beneficiary going to? If you want to, you can put username and password, but of course we all know, it's important to keep your password safe. So make sure that you keep this sheet safe then. Your investment, where are all your investment accounts at? So are they with Fidelity? Are they with Cetera? Are they with, Vanguard? What kind of accounts they are? Account number, balance, beneficiary is important again. Username and password if you want to include there. And your assets, you include what's in your safety deposit box? Is it cash, $1,000 cash? If you have an old vehicle, wedding ring that you include there. What kind of insurances do you have? Is it, Allstate insurance, your State Farm, or your medical insurance? What are some of the deductibles? It's important to know so you know how much to save for. Credit cards, what kind of credit cards do you have? Are there any debt on there, available limits and stuff? So it's just a glance to see where things are financially for you, where you keep your things and how much you owe and who you owe them to. So if you're interested in this, I can send it to you. We can chat a little bit more about the debt avalanche spreadsheet here, where you pay, the highest interest rate first. And then it'll tell you exactly when things will be paid off. Again, you can put in your own figure here, how much you want to pay extra each month, how much you want to pay extra as a startup. And then I think we have one more, just a debt snowball. And again, this starts with the lowest balance first. We focus on all these paid off by balances. So we can go a little bit more in detail if you have specific questions for yourself. But it's really important that whether you use this spreadsheet or, just a regular app or just a regular, just pen and paper, just a cute little notebook that you want to carry around in your purse or your bag, what have you, by all means, just do it. Whatever you need to do to make sure that your budget is easy for you to remember, it's easy for you to refer to, something that's not scary to look at. That's the most important part of having a budget, is knowing exactly how much you're bringing in, how much you're paying out, how much you're saving, and how much you have towards investment or retirement. That's what you want to include in there too. But it's really important that you don't restrict yourself with life, right? Because we want to budget towards your life now, and also we want to budget for the future you, whether that's 6 months, 2 years, 10 years, or retirement you. So it's really important that you have that in mind. So we'll just go back here from current slide. This is the demo there, but so additional tools and supports, you can always meet with me virtually or in person. If you can't do that, I can always chat with you on the phone too for ideas on how to better plan ahead for your future expenses and set up detailed budget. You can always use the tracking tool to manage expenses. Again, if you want that template, you can always reach out to us. Always know your credit score and review it annually. You can always go to annualcreditreport.com. We can chat a little bit more about that too when we meet. And then always keep tab of your expenses with services that we have available here, online and mobile banking, e-statements, automatic savings, transfers, and bill pay. And of course, this is my contact information, but please reach out to me or the phone center. We'll be more than happy to help you out. So again, thank you so much for joining us today or wherever you're at. But if you have any questions, please reach out to us. So thank you so much for your time.